Hello, this is Jordan, and this is your precious metals video market update. Today is December 29th, 2014. And there's a few different things I'm going to focus on in this video update. We're going to start with currencies, and in this chart we plot the US dollar on top, the yen in the middle, and the euro at the bottom. As we can see, each currency is approaching important long-term support or resistance. Of course, the dollar is in a strong bull market, and it's broken out to about a 6 or 7 year high. The dollar index is trading around 90, and the next important resistance looks to be at 92 or 93. Now moving on to the yen's next support comes into play around 79 or 80, and the yen itself is trading just a tad below 83. Meanwhile, the euro last closed at about 121.5, and we see the next strong support just below 120, call it 119. So this looks to be a situation where the currency trends that we've been seeing in recent months, strong dollar, weak yen, weak euro, it looks like they have a little bit more to go. But with respect to the question of when the dollar might pull back or have a counter trend decline, that perhaps could originate from around 92 on the dollar index. Now, I just have a couple charts here on sentiment with respect to the gold miners, and whether looking at breadth indicators or sentiment indicators, they have reached an extreme oversold reading, in my opinion. Now, this chart is from Schaefer's research, and it looks at the put-call ratio for GDXJ, that's the junior gold miners. The GDXJ's price is in red and the put-call ratio is in blue. Obviously, this is just one indicator. No indicator is foolproof. Sometimes an indicator can give you a strong signal and the market can react to that. Sometimes it has a strong signal and the market doesn't react in the way you'd expect. Now what we see here is, looking at GDXJ, it's really had three important bottoms in the last 18 months or so, starting with the one in summer 2013, then December 2013, and then it had one there, I believe, in late May or early June earlier this year. And GDXJ had, after those first two bottoms, about roughly a 60% advance. I think the more recent advance was closer to 40%, but interestingly, the put-call ratio spiked with, the spike, the three spikes you see coincided with those three lows in GDXJ. And in recent days, we've seen another major spike. So the put-call ratio is now at the second highest level in at least the last 2 years. And of course, GDXJ has just been totally thrashed since the end of the summer. I mean, it did have a little rally there in November, but it's still extremely oversold, and so this is an indication that we could see a good rebound. And here's another chart. This is from sentimenttrader.com. This is just looking at GDX, and this is their optimism index, which is constructed by looking at the put-call ratio, volatility in that options market, and how the ETF is trading against its net asset value. So it's looking at those types of things and then putting it all together in one indicator. And again, I'll say this is just one indicator, so we can't base an entire opinion off of one indicator. But over the last 6 or 7 years, basically since GDX began trading, which I think was at the end of 2006, this indicator has hit an all-time low, or call it a 7 or 8 year low. So that's another indication of sentiment being extremely negative and the miners being very oversold. And this is the last chart. So with respect to the miners, as I said, they are extremely oversold. Sentiment's quite negative, so we have to be on alert for a rebound and perhaps a bigger rebound than what we've seen recently. Now, with respect to the metals and the larger question, well, is the bear market over yet? In the past, I've shown videos looking at potential leading indicators of gold, such as how is gold performing against other currencies, how is it performing against commodities in the stock market, etc., etc. Right here are two ratios which I think are very important to watch. On top, we have gold against the stock market, and then on bottom, we have silver against gold. I think you're not going to be able to confirm a new bull market until these ratios break out to the upside. Over the past 3+ years, precious metals have been in a bear market. The stock market has, of course, performed very, very well since it had that 20% decline in 2011. And as far as gold against the S&P, this ratio has not rebounded much. It's had very weak rebounds over the last, not just over the past year, but over the last several years. So we have to see if this can possibly break above that red line and give a strong bullish signal, but there's been no sign of that yet. And the same can be said with the silver to gold ratio. And the reason why it's important to follow that is because silver has been kind of leading gold down. Remember, silver peaked first in the spring of 2011, 5 or 6 months before gold did. The other thing to note is silver's rallies have been pretty weak over the last year or so. So we noted those big rallies in GDXJ. Gold had some decent rallies, but silver's rallies have been on the weak side. So that was, in retrospect, that was a tell that we were only seeing a bear market rally in the sector. So because of those things, we're really going to have to see silver outperform gold for a new bull market to start or be confirmed. So these are two ratios that I'm going to be watching going forward. You can check out more of my work at thedailygold.com. I have a premium service. I also have a free newsletter. You can put in your email address at the top right corner of the website to get the free newsletter. Thanks everybody for listening and watching, and I wish you all happy holidays and a great 2015.